welcome to our 2023 view commentary. These are always really fun, David.
Sure.
Because I have no shame in saying I have no crystal ball ever, zero idea. But what we do have is a lot of data, and we can extrapolate, and we can actually build expected outcomes, which is really fun to do for our clients. The reason we're here today is because we just came off 2022, one of the worst years in performance for the equity market since 2008.
That's always a great way to open this up.
Yeah, I know, right? But here's the funny part about that. Most bond investors did worse than stock investors.
Yeah.
Right? Equity market participation helped better than bonds in 2022. Before we get into 2023, kind of what that entails for, in our view, and our clients, investors in general, let's talk a little bit about the backdrop from a longer term perspective, David, on how we should view markets in general, how we should view our approach to markets and being invested in them.
Well, sure, because when you think about the time frame of investing, it's through current day to mortality for all of our listeners today, right? So you think about when's the longevity of your life? Who knows? Could be today, could be 10 years, could be 20, 30 years, who knows, right?
Yep.
So as you look at the time frame on investing, that's where, as long-term investors, we get excited about years like 2022, all the opportunities, all the tax loss harvesting, all the outperformance we're able to deliver for our clients. And, we get really excited. On the flip side, investors will look at that from just a net dollar amount and say, yeah, but it's less.
Sure.
Right.
Sure.
Just turned into how many thousands of dollars and it's less. And I get that. I totally get it because, you can't buy gas and groceries with a paper statement, right? You need cash. I get that part. So it's combining that mindset, right? Like you said, short-term, long-term view. Yeah. One thing I think on the long-term view that all folks need to always keep in mind is that this last year and potentially part of this year, again, crystal ball, who knows?
Yep.
But this is what's called a cyclical bear market. I don't want to get real technical here today, okay? But
spell that.
Yeah. Bear market bad, right? Yeah. Bull market good. Okay, so let's just go with that. So sure, from the technicality, right? So we're in a cyclical bear market.
Yep.
However, we can't forget it's in the backdrop of a secular bull market. So it just means it's a much larger upward market movement that we're in.
Yeah.
So having a single year or even if it goes longer setback, I don't want to overplay it, but it's not the end of the world. It's not that big of a deal because of that larger picture of the bull market.
And what David's referring to is a great piece we have out there available, looking at our 10-year annualized returns of the market. And what you find is a very repeatable trend going back since Great Depression, going back to the 20s and 30s. And the markets never really repeat themselves, but they most certainly rhyme. And we're in that longer term growth cycle with that short term noise that's happening. And the reality is that crystal ball and short term noise, that's when most investors tend to make the mistakes of wanting to time it, get in, get out, which is the complete opposite of what actually needs to happen on that front.
Right. And so here's some tips, right, to really focus in on, and it's to not forget about what you can and can't control. Okay. So when you think about what you can't control, and that's the part that it's a media frenzy. It's the noise.
Sure.
Everything that Edison, yourself, myself, our firm, all of our clients, we have no control over the actual market itself.
Right.
We have no control over geopolitical events that just dominate the news. And if something happens and some media person, I'm always thinking like, who's your financial advisor? The guy on the news? I mean, seriously, that's
right.
not a good idea, right? So that type of noise all falls under the bucket of what you have no control over. Said another way, that's fear mongering. Mm-hmm. So as a human being, it's that fight or flight and mentality. And they know that if you have no control, and it can sound scary, that fear, you're going to keep tuning in. And they're going to continue to sell those 30-second commercial spots for over $1 million, right? They're going to just continue to make money off of fear mongering. Yeah. And it's always sad when clients do the wrong thing at the wrong time. But it's under that element. So then what can you control, right? So what can you control as you're really thinking about taking control of your situation? You can control how much you save and invest. You can control how much you spend. So we are coming off of a year where the markets are down. If you're retired and your accounts are down, then you're spending a percentage of your balance. Make sure you talk to your advisor, rerun your financial plan.
Yep.
Maybe this is a year where you need to cut one of your 6 vacations out. Cancel one cruise or something. I don't know, but you can control that, right? No one can do it for you. Only the investor themselves can control that. The other part too that we really need to talk about, and Edison, you mentioned this already. Those that participated in the market last year actually did well relative to those that were a little bit defensive in the market.
Yeah, absolutely.
And so you can control your participation in the equity market. So here we are again in the backdrop of a big secular bull. Again, bulls are good, bears are bad. So we're in the backdrop of a large bull market. And the only person that can make the decision of whether I want to participate in it or spectate, right? Participate or spectate. Do I want to watch it go up and watch everybody else do well?
Yep.
Or do I want to participate in it and do well? Right.
And that trend is going to happen again in 2023. David,
oh, absolutely.
Because on the notion you mentioned fear mongering, I want to make it very clear that's not going to stop in 2023. And in some facets, it's going to be worse than 2022. The notion of a potential recession, hard landing, soft landing, where are interest rates going? How's profitability happening? And all that's going to make its way into more fear-based decisions that is going to be detrimental to your financial plan and to your overall investment success. That long-term growth cycle of the markets does remain intact from various components embedded to things we've outlined in our view of 2023, to consumer backdrops, embedded in the fact that when invested appropriately and away from the components that are negatively impacted the most by rising rates, by companies that are earning less money, components that are shifting back to fundamentals, things that we're paying attention to, we are likely to be in a very well-positioned environment for investors throughout 2023 with that tactical oversight and that daily management, David, on that front, to help combat that short-term fear-based decision kind of desire.
Yeah, and to take all of that, again, Edison, I mean, you have a large 20-person team, sitting in front of the Bloomberg terminals all day and making all those decisions on behalf of a few $1 billion, right, of all of our collective clients. And that's great. And then to translate that back then to the hardworking Americans that, earn more than they spend and value our advice, right? Those are the clients that we work with. And if you're retired, again, you focus on what you can control. At that point, you can't necessarily control your earnings if you're retired and maybe your savings. It's really about controlling your spending. And only you can control your spending during times of volatility. Yep. If you are a pre-retiree, occasionally, because of fear mongering on television, pre-retirees can make the absolute wrong decision at the wrong time as well inside of their investment accounts. And don't do that. But what can you control, right? You can control your market participation. Yep. Right? Make sure you participate to your appropriate level. And again, work with your advisor to make sure you understand what that appropriate level is. But participate to your appropriate level, and you can control how much you invest. If the equity markets, I know the general market is generally down about 20% last year, taking a little liberty with rounding there. Yep. But wow, that seems like a good opportunity to maybe increase your investing.
Absolutely. And your equity market participation at that level, right? Because we do think stocks over bonds in 2023, dominantly at that point. And not even your mega caps, right? We're staying away from those. The intricacies of everything we're putting into play for 2023 does require more intimate kind of knowledge depth than everything we've done in the past, David. And it's been really exciting to put that into play for our clients here so far into the new year.
Yeah. So for a takeaway for today, again, we are optimistic on a not overly optimistic, but we're optimistic for 2023.
Yeah, absolutely.
And we absolutely are taking advantage of the opportunities that the market's providing. to benefit our clients. And then, but our clients, they have to do their part too,
Yeah.
right? Understand what you can control. Make sure that you're participating fully into the market to what your appropriate level is.
Hmm.
And then, what are you doing on your savings? Your investing side, if you're a pre-retiree, but if you are retired, what are you doing on your spending side? And
Yeah.
again, make sure everybody owns their part of the relationship, and our clients will continue to be successful.
I agree. Speak with your advisor. Many tools in the tool bag on the investment front, on the planning front, especially on the service front. We're here for you throughout 2023 and look forward to being of service. Thanks, David.
Yep. Thanks, Edison.